from the crypt.
Usually do this with alcohol, but cheers.
Well, I'm kind of disappointed that we're not drinking at 11.
I know, well, I wish. Actually, I don't know.
I was certain that you were going to try to pressure me into that.
No, I think the podcast is making me a bit of an alcoholic. I think I got to.
It's not just crypto?
No, that won't.
It's not just you?
That makes might just be me in my Irish blood. So we got a little ad lib intro there. What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty, as you know, sitting here at 11 a.m. on a Wednesday in Flatiron. Back in Flatiron, not at Barstool, at Anchor headquarters. The Anchor.fm team was kind enough to host us in their office to record this podcast. So we got a really cool view overlooking 25th Street right by the Flatiron building. But time is precious today. We only have an hour, and I have a lot to talk about with my guest. I'm sure you all heard him, but you don't know who he is based off his voice. He is formerly at Digital Currency Group, CoinDesk, and part of the Consensus, or planning the Consensus conference here in New York City. He's since moved on to a new media venture at Messari. I want to introduce you all to Ryan Selkis. Ryan, welcome to the podcast.
Thank you very much for having me.
Oh, thanks for coming on. Like I said, time is precious here. Let's just jump right into it. How did you get into Bitcoin?
So I got into Bitcoin in 2013. I'd heard about it a couple of years prior, but at that point, if you wanted to buy Bitcoin, you had to go to a coffee shop and give somebody money for like a USB stick. That didn't seem like a good investment opportunity. And I was actually really heavy into gold at that point and short the US dollar. So on like every single metric, it was a colossally bad trade. But it was around like the debt sequester. So I started to think about like, the US, debt crisis and what is money and what does our reserve currency status look like in 10, 15, 20 years as China emerges and the global economy decouples a little bit from the US dollar. But I didn't come back to it because I'm not an engineer, so I didn't really poke through the inner workings of it at all until 2013. And at that point, Fred Wilson invested in Coinbase. The Winklevoss twins came out with their ETF proposal. And the clincher for me was when they shut down Silk Road, because then it was clear, like, okay, this isn't just going to be like terrorists and like kitty pornographers and the like. It could actually really get legs because it was pseudonymous and, yes, it's private and you can take steps to ensure that you're private and you have kind of unseizable wealth that you can store. But at the same time, if you're actually moving money around and facilitating illicit activity, there might be ways to track that through, analytics, because it is all available on blockchain. So that was, I made kind of full dive down the rabbit hole in September. I was actually in the process of winding down my previous startup, and I had just deferred business school for a year. So I basically was sitting there with 10 months on my hand, which is not really enough time to get another job. But I just had this, investment that went up 6 times in about, 5.5, 6 weeks. So, I just went down the like buy, sell, hold type of investor diligence process. And then, 72 hours later, as you and so many other folks in the industry know, you come out like haven't like showered and your hair is like, your mind is exploding. And from there it was kind of like no turning back. So I started writing pretty much immediately, which I know, you've obviously learned how much value you get just out of writing every day and being forced to actually put something out there to learn about this industry.
Jump into that, your daily newsletter, which was the predecessor to Marty's Bet as the best newsletter in crypto.
Yeah, something. I mean, until I like kick it back off with my team in September, and then you'll.
No, but like what made you want to start the newsletter? Like what?
Well,
what were you thinking?
I was
you had
writing
10 months off.
Yeah, I mean, I was writing about it and really just sharing some thoughts with some of my friends from VC, and it was just an email chain, and I was kind of posting comments and trying to learn from folks on Reddit. And the fastest way to learn something on the internet isn't to ask a question, is to be wrong. So, some of my friends had suggested, if you're doing this on Reddit and this thing could still implode, you don't want it tied to your reputation. So, you should start a blog, but just do it with a pseudonym. So that's where the 2-Bit Idiot was born. And within a matter of months, I had a few hundred executive followers, because at that point there was no one kind of putting together day-to-day info and actually having any type of informed commentary about what was going on. And so I had a couple, pretty good posts that people picked up. One was kind of a back of the napkin on what I thought Coinbase was worth, or at least what they were doing in revenue and EBITDA. Another was on kind of the inner Circle.
Mm-hmm.
At that point, Circle was 2 months old. They just raised, at the time, the largest Series A in the industry. And no one really knew anything about them. But I kind of gathered a little bit of intel because they were a Boston-based company. I was still up in Boston. And then from there, things kind of spiraled out of control pretty quickly when I got the Mt. Gox documents and then, broke that story.
Oh, yeah. You did break the Mt. Gox story. I forgot about that. So what was that? Let's explain the Mt. Gox story for it. So a lot of the listeners are relatively new to cryptocurrency. Probably came in last year during the bull market, and I think it's imperative that people know their history in this space.
Mm-hmm.
And you broke one of the most integral stories in Bitcoin's history, I would argue. So let's go back to Mt. Gox.
Maybe the biggest in terms of like market impact at the time.
Yeah.
Right. Still, because it wasn't just me. I mean, there was a lot of people that were thinking the industry's fucked.
Yeah.
Right. It was $500 million worth of Bitcoin that disappeared. It was the largest exchange. It was, kind of known amongst the insiders in the industry that there were a lot of, it was a lot of dysfunction at Mt. Gox.
Some told us it was solvent.
Yeah.
One told us.
I'm less controversial these days, so I'm at least I'm trying very hard, so I'm not going to comment on that.
I'm not going to make it.
Yeah, exactly. But that was interesting, right? Because I was at the time, I think I'd 20, just turned 28 maybe, working basically for my kitchen counter and warding off like real trolls, like the real troll army, like the hardcore Bitcoiners that just lost their life savings in Mt. Gox, thinking that I was just lying about this and spreading this news and basically making it impossible for Mt. Gox to emerge solvent. Because I posted these documents that basically was their crisis strategy draft, essentially them game planning on how they would just hide this.
They would exit scam.
And then make it all back in terms of, fees.
Yeah.
Over some period of time, which, based on the 4 different hacks that Mt. Gox had experienced previously is probably a questionable assumption. But the great irony is now everybody's going to get their money back and then some, not in Bitcoin dollars, of course, but they are going to,
right?
yeah, they are going to make money in yen terms.
Yeah, it's the Mt. Gox saga. It never ends. It never ends. It's still ongoing, and it's the Mt. Gox Trust is another source of FUD. So people are watching that wallet to see when those coins move, and they want to blame price movements on that. But that's just a narrative. But staying on Mt. Gox, it's interesting to see, because that's like when I first got in as well, and that was like the darkest time in my crypto journey or my Bitcoin journey, I would say. And I think I said this on Palm's podcast yesterday, but I think it's important for people to keep a journal and remember what they felt while these events were going on. Because I feel in this bear market, I'm a little calmer, a little more at ease, having gone back to seeing what I felt in late 2013, 2014, 2015. So don't fret out there, people. This stuff has happened before, and I would argue that this bear market's nothing compared to that. What would you say?
Well, it's easy for us to say because we're still way above water.
That's
right?
true.
So, anyone's first 70% downdraft, that's a kick below the belt. So I didn't feel great from the end of 2013 to January of 2015 when Bitcoin went down almost 90%. But you kind of knew what you were signing up for. You knew that this is that had happened historically. And the thing is, the people that kind of passively speculate, they'll say, fuck this, and they'll cash out, and that's it, right? But the ones that actually, where the bubble is the thing that kind of hooks them, and then they get into the industry and do fall down the rabbit hole, I feel like you start to A, develop a thick skin, and then B, as you see all of this infrastructure getting built out and all these risks getting de-risked one by one, you start to think, well, if I was excited back then, maybe I should put in more money. And so people and I did this too, right? I remember being at the Miami conference in January 2015, and I was on the roof deck with my now wife, and somehow she said yes, even though I lost like 80% of our money in 14 months. But at the time, I remember saying, like, Bitcoin just went down below 200. There is like this, and this are happening. These 10 different companies just got funded. These dozen entrepreneurs that are just like world-beating entrepreneurs are all in on this. All the major venture capitalists are talking this up. This something is out of balance, and like I want to buy more. And she was like, "Okay, I trust you," which in hindsight looks like it was smart, but obviously could have just as easily gone the other way. And I think that's the thing that whether you call them Bitcoin maximalists or name your favorite cryptocurrency, I think people they get way too definitive about, well, yes, we're here now, but we're going to be at 1 million.
Yes, it's binary, people. It's binary.
Yeah, it's still very binary.
No, it's interesting. And actually, one thing that comes out of these bear markets is building. And I would argue that what you're doing now at Messari, you guys are building. So before we get to Messari specifically, I think it would be advantageous for us to sort of jump into your history with CoinDesk, what it was like to work there at that point in Bitcoin's history and crypto's history, what you guys were doing there, and then if you are able to transition to how you decided to build Messari and based off the lessons that you learned at CoinDesk and DCJ.
Sure. Yeah, it is kind of all part of the same story. I mean, after Mt. Gox, it was about 6 months. I continued to write. I was doing a little bit of consulting, and I through the newsletter got to know a lot of the industry's execs, mostly because it was so small at that point. And the Mt. Gox story, everybody knew me, for better and for worse, right? Mm-hmm. And so I got to know Barry Silberts at DCG, and joined him before DCG existed, as kind of the first skunkworks hire at Second Market that was working on this newly created entity that was in the works. And initially, given my VC background, I just signed up to help him with seed investing. From day one, though, the goal was, okay, I can help you with the fundraise as we go through this transition process from Second Market to DCG. I can help. We can recruit more members of the kind of core team. We can, and kind of in the process, I can help blocking and tackling on the investing side. So I did that for about a year, and we closed the fundraise right on cue. We announced that at Money 2020. We met with Jeremy Bonney, the outgoing CoinDesk CEO, at Money 2020 later the day that we announced around, and basically started talking about the acquisition of CoinDesk. And we already had plans to do a large global kind of flagship conference here in New York in May, but we didn't really have the marketing engine to pull it off. We had all the relationships to get like the speakers, to get some of the early sponsors, just given the size of the DCG portfolio and kind of how well networked we were. But we were missing kind of like the front page content marketing funnel. And so that's really where CoinDesk became interesting, because the company was not doing well because the industry wasn't. And the ad revenue model is really, really tough business. Mm-hmm. But they had run a small version of Consensus in September of 2015 that did very well. City Ventures was a title sponsor. It was very well programmed. June Ian Wong, who went to Quartz during the transition, actually is now back at CoinDesk. He just rejoined.
He's doing their South Korea coverage, right?
Yeah. Well, he's I think Europe and Asia, but okay. he's basically been spearheading the Singapore conference, so I'm sure it's going to be great because he and Jeremy and a couple others on the editorial team kind of spearheaded the September event. So we knew that they had this great general media brand. They had this great kernel of a conference, and we could throw a lot of gasoline on it. And so we bought the business in January. I ran the restructuring over the next 18 months. And we 10x revenue and Consensus went from a single day 400 person event to in last year's events, 2,800 attendees over 2.5 days. And of course this year was I think even triple the size of that.
Yeah, this year's was a sight to be seen. There's a lot of people.
And that's a hell of a business, that event business. It's not super sexy, but they, once you get the brand and kind of the network effect, it churns out a lot of cash. So that's, a lot of money that can get reinvested. Yeah. And so CoinDesk is in, great shape now. But I left last summer and decided I didn't want to do a media business. So you introduced Messari as a media business.
Sorry.
No, it's fine.
First page of crypto, front page of crypto.
Yeah, exactly. So, we're at the end of the day, we're trying to build an authoritative data source for the industry.
Yeah.
And data by itself is not something that people generally come back to look at day after day after day. So you need to provide some context, some wrapper for data, which is why we've started with the kind of curated content and research. And to me, coming at this from, I get the newsletter backgrounds, the investor background, running CoinDesk, from 4 different sides of the table. I've been looking at crypto's data and information problems for 5 years now, which I think puts me in a category maybe like 3 people. And the one thing that was obvious is to actually build a trustworthy information resource, you really have 3 pillars that you need to get right. The first is very carefully curated content and research. So what news actually matters, what research actually matters, what analysis pieces are new and novel and exciting and not just vaporware or marketing jargon. The second is, what does the quantitative data say, right? So what's actually going on, not just in the markets for these different assets, but on these different tokenized networks. What are the transaction volumes? What's the fee market look like? Is it, can you measure the centralization or wallet activity? But then the third bucket, which really hasn't been captured at all, is this disclosures bucket, which we're really focused on. And that is, how do you get these token issuers to make certain common sense disclosures about the activity of their ICO, which really boils down to, for us, we're not trying to get like an S1 or kind of like a full blown financial report out of these projects that actually sell tokens. All we're trying to do right now is figure out who are the verified personnel that can speak on behalf of the project and who's kind of affiliated with them in terms of the core developer team. What are their trusted communications channels, right? So if you see an announcement on this website or this blog or this Slack channel, it's coming from the authorized representatives, if you will, that are speaking on behalf of that entity. And then finally, how do you actually measure ongoing distribution of a project's token, right? So many of these projects now have token treasuries that they're unwinding. They've got vesting schedules that apply to the investors, to the advisors, to the founders. Some have foundations. There is no way of actually understanding how this supply is hitting the market. And in a speculative market that's just based on kind of future expectations, one of the only fundamental metrics that matter is what is your expected annual inflation, right? And that a lot of that's hidden right now because this is all pre-mined and it's distributed over time. So the question of how does this get distributed is very material, right? So, and Vinny Lingham at Civic has been very good about this. I'm not going to get into whether people think it's a good project or not. I know you're probably going to have strong opinions just because of not Bitcoin, but
I have strong opinions because I think he launched a token and then said he doesn't need a token like a year later.
Well, I don't know that he exactly said that. So there shades of gray with like how the token is needed and not. But I don't know. I don't know exactly what quote you're referring to. Regardless, he reached out proactively to us, and I'm sure to CoinMarketCap and several others, and on the year anniversary of the token sale said, "Hey guys, your supply information is wrong because we just hit the 1-year vesting cliff for our tokens. So a third of them are now liquid, which, by the way, translates into about 30% inflation if they were to dump it on the market that day." And they wrote a post about how that, obviously we have no plans on doing this. We're going to give plenty of advance notice for how we'll unwind secondary, trades of these assets. That is not the norm in the industry, right? To even address that proactively. So before we can get into, do you need this token or don't you? Let's figure out who's getting dumped on and when tokens are actually hitting the market, whether you believe in the tech or not. The market's gonna long-term, things are gonna play out in a way where the market will rationalize, and good projects that have tokens that must be held and that actually have some type of value, they'll stay valuable and get more valuable. Others will fade to oblivion. But in the meantime, it helps to know who's making money on the way down.
All right, so 2 questions here. First, so you've got a growing army of analysts, which has been very impressive to see, and they're putting out some very good pieces that make you think. So that's the first question. What's it been like growing that army? What tools are they using? Are you just letting them sort of find their own niche within Messari and attack certain vectors? And then two, what are a couple of examples of token projects that you see having long-term value?
Well, so for the Army, I wrote one post in January and had about 100 applicants that said that they were interested in joining and kind of helping out early on. So we should make clear that this is a kind of an organic community. These aren't paid employees they're just contributors to the open source library, just like you'd have with Wikipedia, right?
Exactly, and there's like a thirst to get in. Like everybody wants, like, how do I get a job in crypto? How do I get a job in crypto? And I think this is actually a very good first step for a lot of people.
Yeah, and what we said was, from the onset, look, there is no model. There's no economic model here, right? Anything that gets contributed is always going to be free and open source. So if you'd like to contribute, great. We think we're going to build a fantastic community. There's going to be a lot of other smart people that are working on the same problems. A lot of people in the process of do your own research, right? Doing their own research are doing redundant, mindless work that needs to exist in one place, right? We shouldn't be doing research on what annual inflation is for a given token. We shouldn't be doing research on who's the team. We shouldn't be doing research on where do I find the fucking white paper. Like, those are the things that this community has been kind of like slowly cobbling together and contributing to this open repo, because it needs to exist as a public commons somewhere, some way, sometime. And so the thinking is, if you're contributing to a kind of a greater public good, if you will, and in the process, you're going to get to engage with a lot of other like-minded people, and a lot of them are going to be in the industry for a long time. And I think the way that I was able to make that pitch, somewhat credibly, is I worked in this industry for a year for free, writing every single day with really no monetization plan, and people noticed, right? People noticed Chris Berniski as a junior analyst that wrote a book on the subject, and now he's got one of the larger, more reputable funds. People know Nick Carter, right? There's so many examples of non-engineer, very rapid risers in the industry that are really in a position of prominence for no other reason than they just wrote a ton of really good stuff, stress tested their ideas in public, and were able to ultimately earn an audience because of some unique insights. Kyle Samani, and Tushar, other examples. So there's a lot of these, folks, and I think people look at those examples and say, well, if I'm doing all this research anyway, and I can, have assistance and kind of a second set of eyeballs on any idea that I'm putting out, and I might be introduced to new ideas, and so that's going to help me kind of cross-pollinate any of my own pieces. That's going to make me much more valuable, and ultimately, help me, break into this industry in maybe a non-traditional way. And so I think that the analysts are awesome, right? Like we have Sunday morning calls.
Oh, nice.
With the community, and I think the last one, like 40 of the 110 were on the call. So like the engagement keeps going up. We've got a Discord channel that continues to see more daily active and kind of weekly active contributors and folks that sign in. And it's because we're not just letting in anybody. It's I go on to some of these other Slack or Telegram groups. And it's funny because like I'll see the pitch decks, right? I still see some of these things, and you'll see people bragging about the size of their Telegram group. Well, you actually go to the Telegram group, and it's a bunch of people's when airdrop, when moon, like it's awful.
There's a lot of vapid shit out there.
It's awful.
That's why I try to confine my data sources to very tight-knit Telegram groups.
Yes.
Only if it gets too noisy after a certain amount of people.
You got to keep it exclusive. You got to have standards. And so I think we're very careful about how we grow that community. I could talk about the analysts all day, but yeah, the Messari community is one of the things that I'm most excited about for the project, because they don't stop contributing, right? And so even small increases in the size of the community will have very large impact on a compounding effect on the quality of information that's in our initial library. And then ultimately we'll start to get third-party data partners that say, well, we've done all this work, we're just going to contribute this as long as we're sourced. and people can link back to us, like maybe that is going to be a feeder for us for any of the paid products that we have, right?
Yeah.
So like I think we're kind of on the cusp of building a really interesting, platform business. That's a way overused term. I just strike that from the record. But actually, if you think about like what a platform is, I can make the argument that we're trying to build a platform. Yeah. So that was a very long answer to part one of your two questions.
I like long answers. That's why this is we got plenty of time too.
So yeah, I talk too fast, and that's why I got myself into trouble. So part two was, which assets do I like?
Yeah, which obviously I'm a Bitcoin maximalist. I'm very skeptical of the token environment in general, just because I am finding it hard to see how any of these tokens accrue value, and why a lot of them are necessary. They seem like an unnecessary UX step for your average user. So when I'm thinking about this stuff, I'm thinking about the people below us on 25th Street right now, like walking around. Could that person work a MetaMask extension? Could that person work a MetaMask extension? Could that person like hold a private key? And right now, where it's at, I think a lot of what's going on in the tokenized world in particular is a lot of I don't want to say groupthink, but a lot of developer think, where it's a lot of developers are building apps that other developers can use, but they really are ephemeral after a few weeks, like we're seeing with Augur, which has been one of the most touted ICOs the last 3 years. That's a different token model with rep than a utility token, I would say, right? Correct? They're
it's a staking token.
Yeah, it's a staking token.
It's all it depends on your taxonomy, right?
Yeah, but it goes back to like user experience. Like the only person,
I could make the argument that people aren't using Augur because the layers on top suck, right?
Yeah,
no one's making markets yet. There haven't been any markets that have been interesting enough, So, but part of it is just it's very difficult to use.
Exactly. So that's my point right now. Like, I'm skeptical in the whole space until the UX gets improved drastically, and I'm concerned that may not be possible with a world with thousands of tokens.
It depends on the use case. Yeah, I mean, So with Bitcoin was not easy to use for a very long time. Right?
Still not easy to use.
Yeah, still not exactly. So, I think. Where Bitcoin was in maybe not 2009, but, call it 2012, right? People knew about it, but it was still not easy to use, right? That's probably what you have to think about Augur and Golem and some of these dApps and some of these new utility tokens, staking tokens, whatever, that just got launched, that are still in kind of the stress testing phase. And by the way, which work, but the markets haven't materialized yet. And so that tends to be a UX and liquidity issue. And just like how much of a pain point is the use case that you're talking about.
And to what extent does it need to be decentralized as well?
Well, if you look at InTrade, so prediction markets, I kind of think there's a few very interesting areas to look at for kind of non-money tokens. Prediction markets are exciting. Decentralized exchange are exciting. Non-fungible tokens, I think, are exciting. And then obviously token curated registries, which is something that we're working on, I think are exciting. And there's going to be more of those, right? But I kind of look very use case specific in terms of what is interesting. There's a lot of payment tokens right now. None of those are interesting to me, right? No. General governance tokens, not interesting. Unless they're securing some very, very valuable information resource or part of like market infrastructure. And that's kind of more of a staking token model. But I think I try to break things down in three buckets. I agree with you. Most of just so I'll be kind of very transparent, not about the amount or proportions, but my only holdings right now are Ether, Bitcoin Cash, Monero, and Zcash out of kind of the core like money tokens, and that's the majority of my portfolio. And then the rest is Decentraland, 0x, and Filecoin.
Nice. Very responsible disclosure on Tales from the Crypt. Thank you, Ryan.
I try, man. Yeah. And I don't recommend necessarily that anyone purchases those because my cost basis is going to be different than yours.
Yeah.
Right. So, but for me, it's just, I'm not trading. So it's like I bought some of this stuff and now I don't really think about it. I evaluate it kind of every few months. But the reason for those those investments is A, just like long term. If these end markets materialize, they will be massive. And I think that these are kind of like the best in class that are working on these different components of the industry. But far and away, I agree with you and other maximalists that money is the killer app. But that's one half of the barbell. You've got this then like very skinny part of the barbell, which is what I would say utility tokens will represent. And then the other massive side of the barbell that no one really talks about is crypto securities. Or I guess people are starting to talk about it this year, but that's really an inversion of the whole blockchain, not Bitcoin meme. But with now instead of talking about, we're using the underlying blockchain technology, now it's saying, we're using like cryptocurrencies, but using kind of traditional securities frameworks, right? So it's like a complete 180 based on what Wall Street could get behind because of the news cycle. But regardless, I do think that there's going to be some really interesting securitized products that get built that are very unique to blockchain tech in terms of what they enable. So you think about things like cross jurisdiction insurance products, right, or derivatives that are unique to virtual worlds or prediction markets or any digital currency itself, like DYDX and Dharma, and some of those projects kind of come to mind. So I think there's going to be a lot there. That's not just let's tokenize the Empire State Building, right? Which I don't know how interesting that is. Maybe it is, maybe it isn't. But that we're like 10 years away from that being interesting. What you will see across the board is what is a really unique use case according, when it comes to new money, when it comes to new forms of capturing network utility, when it comes to securitization. And then, there's obviously a ton of subcategories, particularly in the middle, that utility token barbell. And that could be, on the one hand, resource tokens. You can back into some fundamental value of Filecoin, right? You just look at the replacement cost of file storage. Or Gollum, you look at the replacement cost of like centralized compute. For a staking token, you want to own some amount of a token if it's going to give you the right to earn network fees that are X. Because that, you can start to think about it like pricing a traditional income producing asset.
Yes.
So there are scenarios where these assets have value. The question right now is just, all right, everything's gotten ahead of itself. Everything is wildly overvalued compared to where the tech is today. Should you buy at these prices? Probably not.
Right.
for many of the assets, right? But I'm not going to go buy sell on every single like individual like asset.
That's like another.
Because I don't know anything, and neither does anybody else.
That's right. That's right. Like we don't know. Like that's. This has been expounded upon many times on this podcast, but nobody knows, me included, what they're talking about. And nobody knows how this is going to unravel.
That's why the number of newsletters and podcasts is so entertaining, because we all know, as the writers of them and the speakers of them, that we're just kind of. I think there's so many of these, quite honestly. It's kind of gotten taken to the extreme. Yeah. Right. Like I started writing, I think you started writing just as an excuse to learn.
Yeah,
like,
I started writing. I was unemployed, and like people were like,
so why not?
Reaching out, and I was like, you know what? I have this newsletter.
This is like the equivalent of my like 1.5-year-old trying to sound out new words. Like the number of newsletters and the number of podcasts is just, It's like, this is an excuse for people that don't know what they're talking about to like try to say a new word.
I would agree. And for me, it's more trying to make it approachable. So I try to bring like the Barstool voice to this space, because again,
that's what the better ones do, for sure.
It's like a lot of people reaching out May, June last year, like what's going on? Like I know you've been my Bitcoin friend for the last 4 years. Like what the hell is going on? I was like, all right, I'll write this newsletter. Those sirens are the New York Department of Financial Services coming after us. They're coming to get us. Crypto. We don't have our bit license. We actually had to pay Anchor with Bitcoin, and they're not registered as a money transmitter, so we're screwed. Yeah. Game over. But I think, and especially in the bear market, I think people are just trying to sort of not validate, but try to keep the hype alive and focus on like the important things like the building and stuff. So in the newsletter, I try to say I don't talk about price that often at all, if at all. really just try to make people think about the ideas revolving around the space, like the idea of anarcho-capitalism, free open source software, sound money, the effects of mining on the environment, and stuff like that. Just focus on those ideas and how we may be able to change the world. And I think that's what's important, especially in these trying times. But going back to
trying times of Bitcoin at 7,000.
Right. But going back to like the like there's a ton of projects that are extremely overvalued right now. Like maybe like there's been a price appreciation the last few days. People are like, oh, bear market's over. But I'm like, I don't know if you tweeted out like Tron's still at like $1 billion. I think it might have been Kyle Samani. It's like Tron's still at like a $10 billion market or something like that. Like this bear market is nowhere near where.
Yeah, I mean, Joe
be.
Weisenthal does that too. Like,
yeah,
for those
yeah.
playing the home game, Dentacoin is still $130
That's when
million.
he said on
that's like his barometer for whether we've actually hit a capitulation, which I think is kind of a good one.
On the episode I posted yesterday with him, he said you'll know when the bear market is hit in earnest when Bloomberg journalists are too embarrassed to come on a crypto podcast. It's you change your LinkedIn to make it look like you never worked in crypto, and you go on to something new. Yeah. We'll see. There's a lot.
I just think that I should change my LinkedIn to blockchain thought leader.
Oh my God, LinkedIn.
What do you think? Could I get away with that?
I mean, you probably get hit up.
That's
by
basically all.
1,000
That's
people in
basically
one
all
day.
that LinkedIn is used for right now. All I get is spam on that piece of shit network. So
I
I
just use
might
it-
as well just go all in on like the thought leader angle and see if that like has some type of reverse
The
psychology on the pollution that is my in mailbox.
There's a lot of scammers out there, especially on LinkedIn. I just use LinkedIn to syndicate the newsletter. I just like post it and then forget about it for the day, and then show up 9 a.m. the next morning like, what the hell's going on this vapid site? All right, back to cryptocurrency. Let's talk about token curated registries. So what's the whole idea behind it? What are the mechanics of how it works? I know you're thinking about launching a token to make this happen, but you're very open to ideas of how this registry can be created.
Yes.
And it's definitely nothing that's completely fleshed out yet, correct?
Yeah, it's not. I mean, we're kind of iterating on it in real time.
Yeah.
So first disclaimer: we have no intention of selling this to non-accredited investors.
Okay.
The natural users of a token in our system are going to be exchanges, funds, underwriters, maybe the projects themselves, all of whom have some vested interest in creating a transparent library of disclosures for this industry without a top-down kind of enforcement mandate from any one regulatory body. So that's the kind of the starting point, right? Like, no, don't expect to see this on any publicly listed crypto exchange anytime soon. So with that said, so a token curated registry is essentially a way to bootstrap a credential without some trusted issuer of that credential.
So it's decentralized Morningstar or something like that?
Not ours in particular, right? But if you think about lists and credentials, like any kind of information heuristic that we use, it's actually probably one of the few use cases in crypto that's older than money, right? What plants should you eat? What are kind of the rules of the village? Right? You trust the village elder to just kind of like hand those down from on high, right? And today it's actually not that different, right? We trust the Harvard and Ivy League and Stanford, admissions councils to vet really high quality candidates, and we expect that if they have a diploma from those universities and they're worthy of some job, they're worthy of some respect for their kind of intellectual curiosity and abilities. If you want to go to a doctor, you're going to expect that they have a pretty good medical license. If you're going to, and if the stakes get higher and you're going to go to a neurosurgeon, you want to make sure that it wasn't, a small Caribbean school. You want to see like the Harvard diploma on the wall, right? Because you have some expectation that credential is weightier, is meatier than what you would get from just not having that information, right? If your buddy just said, go talk to this guy, he's going to take care of you. So I think we agree that there are some credentials that have intrinsic value because people are very clearly willing to pay for those credentials in some form over time, whether it's an investment of work, an investment of kind of time and energy, or actual capital, right? With a TCR, the assumption is some lists, some credentials can be better curated. The body of the membership of folks that get that credential, that get that recognition on a list, will be higher quality because it is not just top-down mandated. And so what you have to look for with a TCR, at least one that's going to work, is some market that is dysfunctional because there's a global coordination problem. In crypto, that could be regulation, right? These assets trade 24/7. They trade cross-border. It's a game of whack-a-mole. It's just the resources are not there for every global regulator to crack down on issuances and trading of these assets, just because you can route around them, right? And without a global regulator that sets standards on disclosures, you can't have a global self-regulator because self-regulatory bodies get their mandate from top-down regulatory bodies, right? So the CFTC has the National Futures Exchange, the SEC has FINRA. Those bodies exist, because of the SEC and the CFTC.
I found out, I have a buddy who works at FINRA. I didn't know they were public until they were like a public corporation until like last weekend. It blew my mind. I thought they were always a government entity.
Yeah, so it was like the National Association of Securities Dealers, and then the self-regulatory component of NYSE merged to create FINRA back like I'm going to botch the dates, but some in the 2000s, right? Yeah. So with crypto, you don't have necessarily an SEC, you don't necessarily have a FINRA that's going to say, here are the standards for disclosures and kind of ongoing reporting if you're a token issuer. But we all agree that this is a problem. So how can we agree on very bare bones disclosures, very remedial bits of information that can be a starting point for some transparency policy, some disclosure policies across the industry? Well, one thing that we could do is we could create a whitelist of projects that meet these minimum standards, and we could have that governed by all of the global exchanges, the major investment funds that are participating in the ecosystem, and any underwriter or potential broker dealer by another name. We could have them actually vote on who should get onto this list, and if they do the work to actually assess whether a given candidate is eligible or should be eligible, then they should be able to reward earn the application fees that those issuing projects pay to get onto the registry. Now, just because you apply doesn't necessarily mean that you get on, right? You could still lose your fee and not get on. So there is an expectation that if you pay the application fee, you think you can get in. Just like, you don't apply to Harvard if you have a 2.5 in high school. And you just play video games the entire time.
It was pretty ambitious, all right?
What's that?
It's pretty ambitious. No,
you know what? Well, if a guy like you should have been admitted to Harvard. If, no questions asked.
No way.
But I think you get the comparison, right? So there's a certain standard. There needs to be a large enough fee pool that makes it exciting for the token holders to actually participate in the governance of the ecosystem, the curation of the list. And if you can do that, if you can bootstrap both sides of that network, then you ultimately can bootstrap a credential basically out of thin air.
It sounds like a scary thought to hardcore anarcho-capitalist Bitcoiners, having gatekeepers credential projects. What would you say to people who are like, this is sort of anathema to the...
I would say it's an anarcho-capitalist dream. I'm more on that side of the fence, and I actually think that markets are going to replace a lot of the existing top-down command and control structures that we have. So we should be able to do a much better job than the SEC or any of its international counterparts with a market solution.
Yeah.
Right? This is, in my eyes, this is like the opposite of scary. This is, the government is simply not going to be able to, because of structural challenges, get a proper handle on this industry. So how can we reward good activity and penalize bad activity to the extent possible? Because you're always going to be able to regulate like centralized choke points. So I think market solutions are needed for decentralized ecosystems. And then the regulators, by the way, still should and will be able to crack down on exchanges, on centralized issuers that are clearly violating securities laws, that are clearly fraudulent, that's not going to change. But what does change is the market is able to self-police a little bit more, and the folks that are involved in that self-policing have some economic incentives.
Yeah, but going back to like the gatekeeper thing, if it's just exchanges and sort of these huge economic players, like maybe that leaves out the anon crypto Twitter sort of self-policing that's been going on for years, or your Stop into Crypts, your Dan Dark Pills, who have been calling out scams and sort of curating their own version of following these token projects and calling out their fickleness and some of their unethicalness. Is that a word?
It's TCRs. It's an initial distribution problem, right? So I concede that it's not a perfect solution to have to exclude anonymous participants, but I would say that identity does matter to some extent. Now, whether that identity is a pseudonymous actor that people have built trust in, or if it's a centralized entity that you know where the headquarters is. I think long term it doesn't really care for us legally to get this off the ground amidst all of the uncertainty. It kind of has to be done this way with known third parties that are regulatable, because the signal that it sends is we have a vested interest in getting this right because we don't want to go to jail and we want to be perceived as being part of the solution at the extreme.
It's everybody's goal right now. Let's just not go to jail.
I mean, it's in some respects, it's not an invalid concern.
No, I think it's a very underscored concern in this space in particular.
But at the end of the day, no one that does white collar crime goes to jail. So it's no one. I'm not gonna name names, but there are certain projects that are no one's gonna go to jail. Even the bigger the scam, the more you get away with. So I'd argue that a market-based solution is going to be much more effective. Let's not even talk crypto, right? Elizabeth Holmes got what, a $500,000 fine and probation. It's fucking bullshit.
I wasn't going to bring up
like
fairness.
Everybody knows it, right? And yet we just kind of pretend, oh, she got penalized. No, she didn't. All that shows is if you have enough clout and you have enough capital and you tried.
She defrauded. She defrauded her investors like $1 billion, and then. Potentially more. And then, so yesterday is another, I'm happy you brought up, like in traditional finance, like the CFTC just fined German bank Hamburger Spassky, I forget the last name, but like $75 million for manipulating a derivative of the US dollar on a futures exchange. So
this stuff happens all the time, right? It's just
$75 million slap on the wrist is nothing for a bank at that scale, manipulating that. They probably made...
It's a joke. Yeah. I mean, the only people that go to jail are the little guys, right? I mean, that's why sorority girls don't go to jail for cocaine, but black men still go to jail for crack, right?
Yeah.
So, I'm not trying to be like, let's just call it what it is, right? I mean, this is like a societal, like structural issue, and I would very strongly argue that a market solution that actually rewards penalties and rewards kind of equally. Right, regardless of who the applicant is, regardless of the size and kind of economic influence, and in some cases actually provides an outsized reward for the bigger whale that you take down, if they're acting, maliciously or unethically. I think that's a pretty powerful incentive mechanism.
Yeah, and so where are we now on the course of going from zero to Token Curated Registries off the ground? And where exactly in that process have you found yourself, and what have you learned so far?
Well, there are a couple of TCRs out in the wild, right? The ad chain guys launched theirs, and what you pretty quickly saw, this goes back to the initial distribution problem that I talked about. They can devolve pretty quickly into populist rule. Yeah, like Facebook and the New York Times were blacklisted from the ad chain TCR as like malicious organizations when it comes to like ad quality. And there's a reason for that, right? And it's political. So these things are by nature political. So identity matters and kind of the voting structure matters. The way that we've thought about this is it's a fool's errand to expect people to buy tokens in a system and actually do the work and vote according to the work that they've done. Because if you're a crypto fund and you own 1% of the TCR, you're not going to do the same amount of work as 99 other analysts for 1% of the pro rata network fees. It just doesn't work like that. So what you will see, I think, is something that looks a little bit more like the Big Four long term, but hopefully a more liquid version of it, or a more modularized version of like the Big Four accounting firms, where to validate the kind of quality of reporting of a token project, or really any, it could be an individual, it could be, a non-token entity, like, just to actually verify that a given organization or person is abiding by certain standards. I think, you need to be confident that those organizations are ultimately going to be kept in check by known entities. If it's just, a bunch of bot accounts, essentially, where it could be one person that owns the entire supply and then votes against
the XRP army take over.
Yeah, I mean, then it's not ultimately going to be a very good list. But that there is another element where your incentives, unless you want to kill the list for some reason, your incentives are to be very judicious about how decentralized that list of voters is, because if it gets too centralized, then the value of the credential goes down, arguably.
Yeah, and that's a interesting problem you're trying to solve, and it's been fascinating watching you. And that's the one thing I like about your Twitter presence is you're finding this out and sharing your findings in the open with the community, which has been
I still think that we're too early to just like build something in a vacuum and then expect that it's going to be brilliant,
right?
Especially me. Maybe there's some people in the industry that can do that. I mean, even the smartest folks in the industry, like Zuko is one of the most transparent folks in the industry, and I'd put him in the category of smartest folks in crypto.
Yeah, I mean, he was working on Jim McCoy's what was it, Mojo Nation?
Mm-hmm.
It was like one of the predecessors.
Jim, aka Satoshi.
Yeah, that's what people think. It's one of the theories. You wrote about that, right?
It actually wasn't my initial idea. There was, I don't remember who it was, but I remember he didn't want to be. Whoever sent it to me just didn't want to be affiliated with the Post, so I just kind of stole it.
Okay.
But I told people it wasn't my kind of original idea, but I checked out all the research and it was pretty interesting. So
that's the Satoshi, finding Satoshi. Do you believe that Craig Wright is 1/3 of Satoshi by chance? Did you?
I'm not sure.
Nah,
I'm honestly not sure, because and so this is the real madman take that I have on Craig Wright. And part of it is also, kind of related to Nick Szabo now. Like I just looked on Twitter and I was blocked. I was like, I was like, what happened?
Nick's been going hard, right?
Yeah, I know. And maybe it's the same playbook, but what I've said with respect to Craig Wright is, if you were Satoshi and people suspected you of being Satoshi, one really great way to hide in plain sight would be to act completely uber irrationally. So people just like automatically discredit you, and to do exactly what he did, which is like prove to some people that he was Satoshi, and then have it called into question by all the other really smart people in the industry, and then just say, I don't have the courage to do this anymore. But screw you, I have more money than your country, right?
Exactly,
like so, like
that's what I was gonna say.
So you have someone that in some parallel universe, or in this one, who knows, could actually be just hiding in plain sight.
It's a beautiful thought. And that's another binary thing. It's like a Schrodinger's box.
I mean, the thing is, I don't really care. Like I've kind of lost interest in this. I like the fact that there's 10 people that are suspected of being Satoshi. Yeah. Like the more suspects we have, the more that risk is. The more the is dispersed.
The centralized leader risk is dispersed. So let's jump into like how. Are you optimistic or pessimistic of the future of Bitcoin and cryptocurrency in general? How have your thoughts changed since 2013? I was actually thinking about this. You doxed your age on Twitter a couple of weeks ago, and I was like, when you're talking about where you've come in the last 5 years, you were 27 5 years ago, and I'm in a similar position now. Like I'm 27 now, and it's like, what can I expect between 27 and 32? Like what you just experienced, and so I would like to get your thoughts on. Are you more optimistic than you were maybe 5 years ago, and what is driving your optimism or pessimism at this point?
I'm very optimistic for just the future of crypto in general. And I think we just got the 5-minute warning. So this is maybe a good topic to end on. I think I'm very optimistic on the future of crypto in general. Do I think we're going to see another 100x for investors? Who knows? I mean, maybe, but that's going to take, not years, but maybe decades to get to that level of penetration, I think. So I think the best time to get involved in the industry was, 5 years ago. The next best time was 4 years ago. The next best time was 3 years ago. So, and that's kind of a good thing, right? Because it's getting a little bit more mature. So you're able to attract more people with different risk profiles. It's still early enough where this is very Wild West, particularly in the non-Bitcoin assets or in kind of layer 2, like, building stuff on Lightning or building things that could ultimately sync back into the Bitcoin blockchain through either side chains or one of these interoperability solutions, Tendermint or what have you. It's still kind of day one in the Jeff Bezos like internet terminology, and unlike you, I actually think that there's greenfields in thousands of potential decentralized applications and projects, none of which are going to be interesting anytime soon, but many of which are going to actually restructure our society. And the internet already has in so many ways, obviously, but we're clearly seeing that it impacts literally everything, not just certain verticals, right? Certain verticals were first, newspapers, right? Now we're starting to see politics.
Nation states.
Like nation states, like rising and falling. Arab Spring was a precursor, then Brexit, then Trump, right? So like this whole sovereign individual thesis, it is playing out. And that I think is one cause for concern. And it gets a little scary when you take things to the logical extreme. But I think if people are building with a long-term mindset, there's a really good book by this guy, Matt Ridley, called The Rational Optimist. And it's basically been like every single like eon of human history or every single major, disruptive change. People always look ahead like 10 years and basically say the world's going to end in the next 10 years. And it never does. And life always, generally gets better. So that's kind of like always in the back of my mind on one hand. And then the other hand, it's like the Nassim Taleb, like every turkey has a great life until Thanksgiving.
Yeah. Right.
And so I have no idea which of those. Maybe it's both.
A combo of both.
Right. Yeah. I mean, ultimately, we're all going to be,
the rational optimist.
Stardust. So
the rational optimist is staring at me on my bookcase. It's been up there. I've yet to get it. Not here, but in my apartment. I was visiting my apartment. But that's one I got to get to. Yes, we are pressed for time. Do you have a parting note for the freaks out there?
Listen to a variety of sources. Don't just get sucked into fandom of any one newsletter or podcast or opinion leader or technology leader in crypto, because all of them are going to be wrong.
I would agree. There's many views out there,
but this is a good one to listen to.
Oh, thank you.
And I say that because you, I think, are one of the few like actual maximalists that has a decent sized audience, and it's one of the reasons I wanted to come on, because everybody else is like very. I'm not saying this a bad way, but everybody else is very open minded about like all these other applications. It's good to have like an extreme, like focused personality that's diving in, and it just doesn't become you interviewing Bitcoin folks.
No, I'm trying to expand.
This was kind of training wheels because I mostly agree with you, but I also see the upside of some of these other assets.
In here. We got to talk it out. I think he would just like, I'd be here like, what did you just say? But
maybe you should start with the consensus guys.
Yeah, I should get Lane Reddick on here. He's not with consensus, but he is part of the upper echelons of the Ethereum development team. But that's all we have this week, freaks. Peace and love. Thanks for coming on, Ryan.
Thank you.
Boom, boom.